Hello, my name is Michael Glass from emini-trading-coach.com, where we focus on high probability trading setups. Before we begin our weekend wrap up, we want to talk about our disclosures. Any symbols that you see today should not be inferred as a trading recommendation. Any form of investment that you choose, stock, forex, futures, options, all have a level of risk associated with them. You need to make sure that that risk is suitable for who you are as a trader. You can't lose your money. Any investment decision you make is solely your responsibility. Trade at your own risk. So let's go ahead and talk about our wrap-up for January 15, 2011. Well, the key events of the past week was that our market continued to rise. Dow Jones up 100 points, Nasdaq up 50 points, the S&P 500 up 200 points. We're up around 2 to 4% for the year, depending on the indice. And overall, we saw that the market had a second good week for the year as the fourth quarter earnings kicked off. 9 out of 10 sectors rose, led by financials and energy. And when financials and energy moves, so do the market. So certainly sectors that you want to watch as you do sector watches. Overseas, we had better than expected sovereign debt offerings for Portugal, Italy, and Spain. Usually that's our Sunday news that can affect the market. And so overseas, the market didn't really affect us this week. Again, what really was the catalyst, the driver of the week, was earnings. Alcoa kicked off our first quarter earnings after the close on Monday, and they did top estimates. Intel did top their estimates. A little bit interesting about Intel is that whether or not they're going to be able to dominate their chips in the tablet sector. There are some people going other places. Microsoft is talking about using, I think, AMD for their chips instead of Intel, so it should be interesting to see how they project out down the road. JP Morgan also topped their estimates and said they'll raise their dividend. And of course, for our Mac addicts like myself, Verizon did announce that they will be selling the iPhone. Existing Verizon customers can order it on the 3rd, everybody else on February 10th. So that certainly had a good tone for the market. But in the end, when we look at what's going on, the economic data continues to show that we have an improving economy. Is it as fast as we want? Sure, it is not. Certainly we want to get people back to work, but the fundamentals of the economy are getting better. So when we look into next week, we continue to look at our earnings season, look at these big names. Citigroup on Monday. Tuesday. Remember, the market is closed on Monday. Citigroup, IBM, and Apple. IBM and Apple after the close on Tuesday. We got Goldman Sachs this week. Wells Fargo, some banks, Morgan Stanley banks, Google, GE. So we definitely got some big boys. eBay's also this week. So certainly some catalysts to move the market one way or the other. As far as economic data, maybe Philly Fed on Thursday, leading indicators, those things tend to move the market at 10 o'clock. Maybe not a whole day move, but you can get a little move out of there. But for the most part, we're going to be watching those big earnings after the close. When we look at our charts, we can see that obviously we are in an uptrend. What does that mean? Buy the dip. There's a funny video on YouTube. Go to YouTube and type in buy the dip. There's a funny video. Had to warn you, there is some alternative language in it, but it's pretty funny. And confirmation now is we want to get above that 1300 price level. Of course, we know that's going to be a psychological barrier. Our resistance right now from here up there is actually up there around 1315. But again, we will have this psychological barrier of the 1300. Now, we talked about that last week. Who knew that we would be up there almost in a week? Our support is going to be around the 1260 area. We'll talk about that when we pull up the charts. We also have the 20 exponential moving average below us. And our point of interest, again, is going to be the psychological barrier of 1300. 1200 was a beast. We went from 1180 to 1200 for a while there. And so we'll see how the psychological barrier of 1300 on the S&P 500 will be. So let's go ahead and pull up the charts and take a look. Okay, so here we are looking at the S&P 500 on a daily chart. And you can kind of get a nice, beautiful look at this uptrend that we've been in for since August, and here we paused here in November, and we've just shot up since November. And we can see we've got a little support here in the 1270, 1260 range. Because of this week's action, we'll look at this 1270 range. Let's go ahead and blow this up a little bit bigger so you can see. So you can see this is going to be our support levels. We want to hold up above that. And right behind it, you can see that this blue line here is a 20 exponential moving average. Really, since November, this green line is the 10 exponential moving average. So it's one of those things where if you have the bank account to hold it, you want to, until it fails, you want to be buying this 10 exponential moving average using the 20 exponential moving average as your stop. But you know, clearly we're in a nice uptrend. We used here's our 13, 15, 13, 12 resistance levels, so we certainly got plenty of room to get up there, and we can see that our indicators remain overbought. They remain to be overbought, but we can, you know, there's nothing that says we can't keep going up, but it is important to know that we are in an overbought state. You can see we had a nice Wednesday and Friday move to really get us going higher to continue. We got a little pullback a little bit, but now we're back in the overbought state. Now we'll go to the weekly charts, and let's go ahead and zoom that up a little bit. And again, you can see we're clearly above that 1270 support level, clearly above that April swing high, clearly above the November swing high, and we're just continuing to move on. So that's really great. But again, long term, our weekly charts are overbought. MACD is just about getting there. So our weekly charts are overbought, our daily charts are overbought. So you got to be smart. We're not saying start selling, but you certainly want to consider, if you're long, especially our longer term traders, tightening up your stops if you want to protect your profits. So we'll go even longer out, and we will see that our monthly charts are now getting there too. Stochastics are getting overbought. RSI's getting up there to overbought. Now, MACD has some more room to go, so maybe we will get up there to that 1300 level, maybe not. But we clearly have made, again, a new swing high, so we are clearly in an uptrend, And one more thing I want to show you guys. Let me pause the charts and show you what our volume is showing as far as our support and resistance. What we see here is a volume profile chart here, and I did have to switch over to the ES. You can use the spider if you want to get the same information. And basically, what you're seeing here is where the most volume is per price level. And so the reason you do this is you can see where the traders are coming in, either providing support or resistance, or where there's the most activity by traders. And so when these long blue lines come in, that's showing you the price levels that traders are coming in and either finding value, or they're, you know, again, find value to buy or find value to sell. Whatever the reasoning is, doesn't make a difference. So you want to look at this, and this is a volume profile study on Thinkorswim, and it's another way of looking at market profiles without all the letters. And this will, again, give you an idea of where people are looking, and you can see that we did accumulate a lot of volume up here in the 1290 level. So this, we may have a little trouble breaking through here, but of course we do have plenty of volume also down here in the 1280 level to hold us up at that 1276 support level that we started at. But I just want to give you an idea of how you use volume profile. Again, it's just showing you the price levels, how much volume is being traded at each price level, and that gives you an idea of where traders are showing value. Where's that volume support? Where's that volume resistance? As we move on to our educational portion of our video, we're talking about setups from Trade Your Way to Financial Freedom by Dr. Van Tharp. And again, you know, one of the mistakes traders make is that they focus so much on the setup, that their setups are their system. But the setups are just a window of opportunity. It could be technical, fundamental, seasonal. As we talked about the market being in an uptrend, which it is, the setup is your area of high probability that the market is going to continue to move that you expect. However, profitable traders know that you have to wait for the move to begin before you enter the market. And so next week, we're going to focus in on, after we set up our criteria, after we set up our setup, how do we time the market to get in and take advantage of the move that we expect to happen. You know that we're on Facebook, YouTube, and Twitter. We've got a great video course on how to develop a high probability trading setup. As we said, the setup is just the beginning. You need the whole system. We do have a video curriculum for you that will teach you the whole system. And of course, we believe coaching. One of the reasons we've give you all this information for free, our free video course on high probability trading setups, our free video course down here at the bottom on how to develop an effective trading system, is that all the information is out there if you search for free on the internet. But you still have to have the psychological capital, the internal systems to take that new indicator, that new system, that trading when you're in, and have the ability to pull the trigger. So that's what we do at Emini Trading Coach. We help you hand by hand, one step at a time, to become a profitable trader by developing that internal fortitude to take the trade. Thanks, guys, and I'll see you next time.